Hey everyone, this is Jay Kiltz, and this is 2 Minutes Today, where we give you a real estate tip in under 2 minutes. Here we go. Today we're going to be talking about how to get a loan for a house. Step 1, where do you get a loan? Step 2, what is a pre-approval? And step 3, what are the basic types of loans that you could be possibly getting? And then at the end, we're going to give you a bonus on how to get up to $10,000 for your down payment to buy a house. All right, step 1, where do we get a loan for a house? Where do we go? Who do we call? What do we do? There's two options that you have. Number 1 is you can go to your personal bank. A lot of the times people are at big box banks, like Chase and all these other banks, Bank of America. And the benefit with that sometimes is they have so much history on you. They know, your payments, they're recording so much data from you. A lot of the times they have a lot of confidence in giving you a lower interest rate than you could possibly with a loan officer. But the caveat with that is, when I've been dealing with these banks, they're not designed to spit out loans as quickly as a loan officer, which is what we use typically as a loan officer. That's kind of almost, I wouldn't call it a side project, but it's just a side note for them. So we've had issues in the past where we're not getting documents on time. We have to follow up with them. We haven't get a hold of them. They're on lunch, whatever it is. So we've had those issues. So just keep that in mind. But if they're giving you an extremely good interest rate, it might be something to consider. The second option is to get a loan officer. The nice thing about a loan officer is they are professionals and they are experts in this industry. They do this on a daily basis. They have all of their check boxes in order. They know exactly what to do. They know the process, and they're getting paid on getting a loan. So they're going to execute and make it happen. Step 2, pre-approval. How do you get pre-approved? What is a pre-approval? Well, there's 4 things that you need to know about it. The 4 things that a loan officer or your personal bank are going to be looking at to see if you can get pre-approved, and if you can, how much you can afford with a house. They're going to be looking at your income. They're going to be looking at your debt, they're going to be looking at your credit, and they're going to be looking at your assets, making sure you actually have money to buy a house. All right, step 3, what are the 3 basic types of loans that people normally get on a daily basis? There's FHA, there's conventional, and there's VA. FHA is a great option for people that are looking for the lowest amount of money to put down towards a house. The issue with FHA, just the downside of FHA is that you have what's called PMI. PMI is private mortgage insurance. Essentially what the banks want, if you're not going to be putting a bunch of skin in the game in your loan, they have a higher risk reward to that loan. So what they want is they're saying, we want insurance. We want to know that you're going to pay off this loan. So what we want to do is up until you pay, with FHA, you have to pay PMI insurance for the life of the loan. It's going to be a couple $100, maybe $200 extra a month to get this PMI insurance. But if you're on a tight budget, you only have $2,500 to buy a house, FHA is a great way to go. Now there's conventional. Conventional is a great loan if you have the money to put down towards a house. The lowest that we can go for down payment is 3% to get you in a conventional loan. But with that, you still have to pay the PMI insurance, which is a couple $100, $100 or $200, $300, depending on the size of the house and the price of the house. But at 20%, after you pay off 20% of that loan, your PMI insurance is completely dropped and you don't have to pay that PMI insurance anymore. So it's a great option. And then the last loan is VA. This is for veterans that have served our country. A big thank you to everybody that has served our country and sacrificed so much for us. This is a big thank you that they get. It's 100% financing. They don't need to bring a dollar to buy a house. And on top of that, they don't have to pay PMI insurance, which is a great thing. So thank you to everybody that served our country. All right. Now, for the last tip, we have a little bonus for you, how to get up to $10,000 for your down payment to buy a house. This is a program called IDA. And What it is Illinois is trying to incentivize people to buy homes, and they're actually giving you money to put down towards your down payment of the house. After you put all the numbers together, usually you can come away with paying 1% to buy a house. If you're buying a $200,000 house, you only need to bring $2,000 to closing, which is less than what you would do with renting. The caveat is you need to have a 640 credit score or better. You need to make less than $101,520, and your debt to income ratio, instead of 55%. So let me explain that a little bit. Let's say you make $2,000 a month, or let's say $4,000 a month. Let's say you make $4,000 a month. You, with a conventional or FHA loan, you can go up to 55% of your income. So 55% of that $4,000 is what your mortgage could be, what you would be paying for your mortgage. With an IDA program, if you get that $10,000, we have to go down to only 45% of that monthly payment. But it is a great option. It's an awesome program, and it's pretty much free money. Thanks, guys. Hope you enjoyed it. If you have any questions at all, please reach out. Give me a message. Let me know what's going on. I'm happy to talk to you. Happy to answer your questions. See you next time.